Hey there. So you're wondering about how state taxes affect Social Security benefits across different states, huh? It's a great question, and it's more interesting than you might think at first glance. Let me break it down for you. First off, it's important to know that the federal government can tax your Social Security benefits. But that's the same no matter where you live. What we're talking about here is how individual states handle taxation of these benefits. And let me tell you, it varies quite a bit. So here's the deal. There are basically three categories of states when it comes to taxing Social Security benefits. 1. States that don't tax Social Security benefits at all. 2. States that tax Social Security benefits the same way the federal government does. 3. States that have their own special rules for taxing Social Security benefits. Now you might be thinking, wait a minute, some states don't tax Social Security at all. That's right. In fact, as of 2024, most states fall into this category. We're talking about 37 states in the District of Columbia that don't touch your Social Security money. If you live in one of these states, you're only dealing with potential federal taxes on your benefits. But what about the other states? Well, that's where it gets a bit more complicated. Some states, like Vermont and Minnesota, follow the federal rules for taxing Social Security. That means they use the same income thresholds and calculations as the IRS. Then you've got states with their own rules. For example, Missouri allows most people to deduct all of their Social Security benefits, but high earners might have to pay some tax. Colorado, on the other hand, allows a deduction for some Social Security income, but only up to a certain amount. Now you might be wondering, does this really make a big difference? Well, it can. Let's say you're receiving $20,000 a year in Social Security benefits. If you live in Florida, which doesn't have a state income tax, you'd only need to worry about potential federal taxes. But if you live in Vermont, you might have to pay both federal and state taxes on a portion of those benefits. It's also worth noting that this can affect decisions about where to retire. Some folks actually consider state tax policies on Social Security when they're thinking about where to spend their golden years. After all, keeping more of your benefits can make a real difference in your retirement budget. But here's the kicker: tax laws can change. In fact, over the past few years, we've seen several states move to reduce or eliminate taxes on Social Security benefits. It's always a good idea to keep an eye on the laws in your state or any state you're considering moving to. So there you have it. State taxes can definitely affect your Social Security benefits, but how much depends entirely on where you live. It's just one more piece of the puzzle when it comes to planning for retirement. Remember though, this is a general overview. Tax situations can get pretty complex, especially when you start factoring in other sources of retirement income. It's always a good idea to consult with a tax professional or financial advisor for advice tailored to your specific situation. Any other questions about Social Security and taxes? Write in comment section.